Sister Afnan Mohaddam is an ESG fund analyst and recent graduate from Hamad bin Khalifa University in Qatar with a master's degree in Islamic finance. She completed her undergraduate studies at the University of Pennsylvania's Wharton School in 2015 and went on to work in the corporate retail industry for nearly 7 years in demand forecasting, inventory management, and strategic and analytics. Sister Afnan's interests include socially responsible consumption and investing, financial inclusion, and how the Muslim money mindset should inform individual behavior and financial product development in the Islamic finance industry. Very timely, if I should say so. Please welcome Sister Afnan Mohaddam.
Assalamu alaikum. Okay. So I'm here to talk to you about a sector that you may have heard of in the last couple of years especially. It's grown a lot, buy now, pay later. So the concept of installment loans isn't a new one, but about a decade ago we saw the emergence of a new payment method basically embedded in the checkout process. And this is buy now, pay later installment loans that are provided by fintech companies. It started and really grew fast in Europe and Australia and New Zealand, but it didn't really take off in the United States until a couple of years ago. There are both interest-free and interest-bearing installment options that are provided for consumers, and we saw really the effect of the pandemic on the growth of this sector globally. In 2019, buy now, pay later installment loans only represented 1.6% of global online transaction values. 2 years later, it had doubled to 3%. And in the research that's been done on this, which is still pretty early on, the pandemic really is highlighted as the driver of this globally for a couple of reasons. First of all, we saw stores shut down, people were at home during lockdown shopping online, and then there were also changes to cash flow, income streams were affected by loss of jobs, and so on, and seeing more partnerships between fintech providers and more merchants. So as you're shopping, you came across this option a lot more as you're checking out. This payment method is now projected to be the world's fastest growing one, not only online, but also in stores in the next few years. And the number of users globally is projected to double in the next 5 years to reach roughly 900 million by 2027. During the next few years as well, there's a projected decline in the use of, or the share of credit cards in global transaction values, both online and in stores. So there's a slight shift happening here. While the percentage is still quite low, the growth rate per year is really fast, and definitely in the North American market, it's something that most people didn't know about a couple of years ago, and now it's kind of hard to avoid. So why is this the case? And one of the key things that has been used to market buy now, pay later is that it's a tool for financial inclusion, supposedly, by providing access to supposedly safer, lower cost form of credit, specifically for first-time credit users or people who have low credit scores. I won't define financial inclusion because, mashallah, a couple of our speakers have already done that. But one thing I did want to point out is this definition, or this idea that access to credit assists individuals and small businesses in managing their cash flow, investing in opportunities, and meeting their basic needs. So this is like an important point for my presentation. The idea of meeting basic needs such as food, shelter, healthcare, and education. So as has been mentioned before, there's a disparity in financial inclusion across the world. 20% of adults in emerging markets have either a debit card or a credit card, and this is much lower than in developed markets where that's 80% of adults. So then the question comes, okay, if buy now, pay later is pitched as a tool for financial inclusion, what is the appeal for it in a market like the United States where most people do have a credit card or a debit card or both? And that is what we're finding right now, is that this pitch is not actually very true. So the Consumer Financial Protection Bureau published a study earlier this year in March that said that 95% of the users of buy now, pay later in America already have a credit card. So it's not really creating opportunities or providing access to capital for the first time for the majority of users. It's really just 5%. So what's the appeal here? Essentially, there are a couple of key factors, primarily that a lot of them have zero interest options and no late fees, no penalties, and they're pitched with a very clear repayment schedule. So buy now, pay later has come across to consumers as being cheaper and easier to understand and access compared to credit cards. A 2021 McKinsey study found that 40% of buy now, pay later users preferred using buy now, pay later over credit cards. Another 30% preferred it over debit cards or paying it with cash, which, I mean, I think cash is not as used as much anymore. And then 31% said that they viewed buy now, pay later as a lower cost form of financing and that was the reason why they were using it. Experian last year found that 80% of buy now, pay later users actually used it to avoid credit card debt. Like that was expressed as like one of the main reasons. So for Islamic finance practitioners or really anyone concerned about rising credit card debt or consumer debt in general, this is a really interesting development, especially knowing that there are now about half of American buy now, pay later users have said that they they use buy now, pay later to complete a purchase they would not have been able to afford otherwise. So it's pushing people to spend outside of their comfort, outside of their means. But it's something that has grown really fast, and as a result, several American banks have now introduced post-purchase installment plans to try to compete with the growth of buy now, pay later from fintech companies. Just to mention a few quick growing concerns. Someone could talk about this for hours, but basically some of the growing concerns about the sector, the alarm bells that have been raised so far, include the fact that fintech companies are currently excluded from consumer credit regulations, and there's discussions on how to regulate this sector. There's also concerns, as I mentioned, about the rising consumer debt that could be associated with buy now, pay later, as well as some hidden late fees. But also, these installment loans are not currently reported to credit bureaus, so it's kind of a gap for from a regulatory perspective. Yeah, a couple of other concerns I won't go over right now, just moving forward. So overall, because this sector has been growing so fast in the last couple of years, there's not a lot of data available, and definitely not a lot that's been explored from an Islamic perspective. And I mean beyond just looking at the technical contracts, specifics to see if something is Sharia compliant or not. What is the overall goal of this payment method or the implications of it as a growing sector? So my research aims were threefold: to contribute an initial kind of Islamic perspective to this growing but sparse literature, to guide Muslim consumers in assessing for themselves whether fintech buy now, pay later is a more Sharia compliant but also responsible form of credit compared to credit cards, and then to provide recommendations for Islamic finance players that are considering potentially launching their own Islamic buy now, pay later products. So the main questions that I asked are, looking at the Sharia compliance of these offerings, as well as, how can we design models that really center the objectives of the Sharia and ensure the well-being of individuals in society. I compared several models from the US and the GCC, and I did that for a couple of reasons. Both of these were late adopter markets. Buy now, pay later was growing in the European market, as I mentioned, New Zealand and Australia, but the US is a new market, as well as the GCC. However, both of them also have a really high compounded annual growth rate projected for the next 5 years. And there's a really stark difference, though, in terms of the credit card adoption in each of these regions. So as I mentioned, the US, in the case of the buy now, pay later users, the majority of them already have a credit card. But generally speaking, roughly 2/3 of Americans have at least one credit card. In the GCC, it's a much lower number. It's a range between 20 to 50%. The 51% is in Qatar. And because of how fast the buy now, pay later sector grew in the US in the last few years, now American buy now, pay later users represent 1/5 of users globally, which is pretty astronomical compared to where we were a few years ago. So it's a market that's really important to understand for the sector globally. And on the other hand, the GCC, while it's much smaller, it's a growing hub for Islamic finance, but also the governments there are focusing on fintech strategies and digital payments being part of those strategies. So I'm kind of going to move through this a little faster, but I looked at 5 fintech providers, 3 that are in the US, 2 that are in the GCC, and then 4 installment plans that are offered through credit cards, 1 from an American bank and 2 from Qatari ones. So just kind of quickly, some of the fees that we have to keep in mind when we're looking at this from an Islamic perspective, besides interest, the permissibility of commission fees, like a percentage of the transaction cost, issuance and renewal fees in the case of credit cards, late fees, etc. So with that, just to look at a summary of the 5 fintech buy now, pay later models, most of these are point of sale, so online, but also in stores. And Affirm, PayPal, and Sezzle, those are the 3 American ones. They offer interest-free payment plans that are like over 6 weeks. Those interest-free ones also have no late fees. So for like the American Muslim consumer, it's a great option of having interest-free credit that's on a short-term basis. They do have interest-bearing ones as well, so gotta be aware of that. Tabby and Tamara are the 2 models that I looked at in the GCC, and they only offer interest-free ones. They are certified Sharia compliant, and they charge late fees, but they donate them. The idea is to really deter late payments, so they have a fee, but then they donate it if it ends up being paid. Overall, what I noticed was that the models are pretty similar. The differences really came in like the duration, as well as like the way they dealt with like if it's accessible in stores or not. And in the case of Tabby and Tamara, all of the payments are monthly. So, you know, if someone was using like a monthly payment plan for Tabby or Tamara, it would be automatically split into 4 monthly payments. The interest-free options in the US are over a much shorter period of time, 6 weeks. You pay 25% during checkout, and then another 25% in 2 weeks, and so on. So the options in the GCC are over a much longer period of time, so it adds more flexibility for the consumer. The credit card installment plans are a lot more complex to understand. They're each very different, unlike the fintech buy now, pay later ones, which are a lot simpler and very similar. There are different fee structures. There's usually, obviously, you have like the cap of your credit card, your credit limit, but they also oftentimes have a cap on the number of loans you can take out at a particular moment in time. So regardless of your credit limit, for example, my Chase plan has up to 10 plans at a time. So you'd have to pay off one of the loans before you request another, before you use another one. And I should mention that with these credit card installment plans, except for one here that I looked at, the other 3 are post-purchase. So you'd have to go into your account and then select a particular transaction and request an installment plan on it. So it's a much more thought out process as opposed to like an impulsive checkout process where you just want to split it up into an installment. So generally speaking, this is a summary of the 2 different types. They each have their advantages. The predominantly, like the popular version of fintech buy now, pay later is interest-free, and they do come across as a lot easier to understand and having lower cost because there's no late fees, no other administrative fees. It's pretty straightforward if you're using the interest-free ones. It also offers an option for Muslim consumers who want to access interest-free short-term credit. And to specifically, what I was interested in is like sidestepping the interest clause debate. So, you know, there's a debate among scholars about whether or not even using a conventional credit card is permissible, even if you're going to pay the full amount and not be charged interest, because you're like agreeing to pay interest in the contract itself. So this just sidesteps that altogether. But what is really concerning is that, as I mentioned, 50% of users have used buy now, pay later to buy something they can't afford. So it really needs to be used mindfully. There's not a cap on the number of buy now, pay later loans you could take out right now. So it's a slippery slope, and that's a big concern across the board. And especially as Muslims being concerned about debt and not taking that lightly and overconsumption, that's an area that really needs to be explored. The credit card installment plans can kind of address some of these concerns. As I mentioned, obviously, like any activity would be reported to credit bureaus, but also it might help curb some of this impulsive spending because you have to consciously go into your account, select a transaction that's usually a higher threshold, like at least $100 or something, and then choose to have that split up into X number of months versus being offered that at checkout in stores or being offered that while you're browsing. There's a lot more friction in the process and can really deter this mindless just borrowing, requesting another loan. And a lot of the options that are out there also have a cap, as I mentioned, on the number of loans that you can take out. So moving on to the discussion, my main question then after all of this is, what are the implications of having access instantly to installment loans? Will this cause more benefit or harm to users in the long run? Is this really going to increase financial inclusion? So to understand that, we need to break that down into a couple of other questions. Are the fintech loans here being used to pay for essential services and items that really help improve the well-being of the individual, or is it really just another vehicle to increasing household debt? We already have record-level credit card debt right now as a country, and will it, on the other hand, also help deter the use of interest-bearing credit, like credit cards? And if that would be the case, that could be a benefit in and of itself from an Islamic perspective. And would this also facilitate more affordable access to education, healthcare, and so on? So I broke down kind of the things that I saw across these different models into like a maslaha-centered, well-being-centered model of designing buy now, pay later offerings. I didn't get a chance to mention this earlier, but several of these providers, they don't accept credit cards as a form of payment for the installments, which makes sense, but others do. So the idea is if you're taking out an interest-bearing loan and then you choose to pay that with a credit card in the future, you're just pushing off your debt to another creditor, and then it's a cycle. So really either not accepting or disincentivizing by having charges to really limit that, like requiring a bank account to be linked or a debit card, would be really helpful in reducing the likelihood of increasing credit card debt as well. But what I think is really an amazing opportunity is to expand the use of buy now, pay later beyond the retail sector, beyond discretionary spending, into healthcare, into education, into the areas where someone, whether they're lower income or they have a sudden huge expense that they don't have the emergency funds to cover immediately, that if they have the option of a payment plan, it can really make that less of a burden, or even make education accessible. And there have been a few studies done in the healthcare space that are pretty promising, I think, and something for us to think about, the impact that this could have on like medical debt, reducing medical debt in the US. But there was a study done from 2009 to 2014 looking at how offering a payment plan actually had patients coming in for treatment earlier, and then they had improved clinical outcomes because they could actually afford their treatment. And so offering even a 25% down payment option reduced hospitalizations by 0.5%, the hospitalization rate by 0.5%, and it reduced the mortality rate by 0.3%. And I think that's something for us to really think about, like how many people in this country are avoiding healthcare, life-saving healthcare or preventative healthcare, because they can't afford it, which is a whole other discussion systemically. But given the system, how can we use tools like this to actually enable people to have access to education or to being able to buy inventory in advance if they're a small business, things like that, rather than buying a Louis Vuitton bag on an installment plan. Like that's not really achieving anything from an Islamic perspective or for the well-being of the individual in the long run. And I think I might be running over. Oh, okay, still got a few minutes. But in terms of deterring users away or deterring them from using interest-bearing forms of credit, I would also recommend having more incentives and rewards tied into the buy now, pay later options, so that they're considered appealing, whether it's points or cash back or things like that, because a lot of them don't right now. Or if they do, it's like with specific vendors. Whereas if you have a Visa credit card, you just, a lot of times there are different rewards programs with each of those. And so it's hard to get loyal credit card users to leave credit cards. But if you have a viable alternative, it could be something that convinces them to do that. And in terms of reporting to the credit bureaus, right now there's it's in the works as to how that will happen. Discussions are happening, but Sezzle is one of the companies that I looked at, the fintech providers that I looked at, that actually has a voluntary reporting program. So you could sign up as a user and have your loan repayment history sent to credit bureaus voluntarily. And the idea is if you have a low credit score, this can help increase that by showing good repayment history. So overall, what's the future of buy now, pay later in the US and the GCC? Buy now, pay later in MENA and in the GCC is currently being used not only for discretionary spending, but also for necessary services. So we saw that with Tabi and Tamra. You could use these services at healthcare clinics, online training programs, et cetera. So that's a big difference between the US, where right now you have only 5% of buy now, pay later spending is on healthcare, only 5% is on like auto maintenance, but 30% is on consumer electronics, another almost 30% is on clothing and fashion accessories, another 15% is for cosmetics. So a lot more discretionary spending happening in the US with that, and as I mentioned before, half of users are buying more than they can afford using buy now, pay later. Ammar Afif is a CEO of a fintech buy now, pay later provider in the GCC. It's not Sharia compliant, but I found what he said here to be really interesting. He made note that buy now, pay later can work in two situations really well. One, to really meet the consumer demand for alternatives to credit cards in markets that have high credit card penetration rates, the US being a good example of that. And then on the flip side, to offer an interest-free form of short-term credit in countries where there isn't high usage of credit cards. And that's the case in the GCC right now. So as I kind of prepare to summarize here, there's a lot to be explored in this space in terms of further research. Needs to be done on how this easier access to credit will affect consumer spending habits and household debt, how the upcoming regulatory changes will affect the sector and its growth. Maybe it will stall, maybe it'll shrink, and the effect of upcoming credit reporting changes as well, how that would impact the user's credit scores or their ability to improve it. And then another area is, moving outside of either credit issuers or fintech providers, there's this other smaller space of installment as a service being embedded into the checkout process, where you don't see, okay, this is a loan provided by a firm, it's directly offered by the vendor, but there's actually like a service behind the scenes that's working to embed it into the checkout process. So that's something that's evolving as well right now. So in conclusion, I think buy now, pay later can be a really good option for Muslims or individuals looking for interest-free short-term credit, but there has to be individual kind of regulation of your behavior and an approach to how much you're spending and budgeting carefully, because it can get out of control. You don't get like a statement once a month like you do from a credit card issuer of like, here's everything that you owe outstanding. You get like an email 2 days before, oh, you have a payment in 2 more days. But overall, there's really a lot of opportunity if done mindfully to use buy now, pay later to create access to credit in the areas that really matter, that will really improve people's health outcomes, their educational outcomes, just unexpected life expenses, and business to business as well expenses. So overall, it's a topic that I'm pretty excited about, but it's really early on. And with that, I'll pause for questions if we have time. I don't know if there's a...
Have you get enough time to study the model you mentioned in here? That is, no, not this. The fee was that start with A? Affirm, and also Klarna.
Yeah.
We do use them pretty often.
Yeah.
But
so
there are.
Sorry, continue. Sorry.
Yeah, there are certain elements to Affirm that they embed in from backend certain percentage, which you'll see as fee, service fee.
Yes.
So that part are not disclosed right before you just hit the checkout button and just pop in.
Do you mean as a consumer or as a business?
As a consumer. So as a business point of view, do you have enough time to study those, and then how do you evaluate that as contrast to the interest? Will that be legitimate, you think, or should I use them or no?
I haven't seen fees in Affirm. There are two options usually offered. They have pay in 4 interest-free installments, and basically for all of these, when you're checking out, it'll show you, after you select your plan, it'll say, okay, you have, this is the total amount, and then if it's interest-free, it'll say over X amount of payments, and it'll usually list out your next charge will be on this date, then this date, then this date. So usually it's bi-weekly in the US, but as I mentioned, overseas there's monthly options. The interest-bearing ones, it'll say, okay, this is the original transaction amount with X amount of interest equals this dollar amount. Here's your total loan amount, basically, or the total cost, split by X number, and this will be your installment price or cost. I haven't seen ones that actually have other fees besides.
By them, not by us. They are saying that if total purchase is $100, the item price, and if we pay in 6 installment, and they see you add 2.5% extra.
Oh yeah, that's an interest rate.
So that's, I'm saying that, is that an interest you count, right?
Yeah, so
that should be an interest. So
yeah.
My question is, have you studied that is an interest or is a fee or a profit additional to the fixed amount of the product?
So the way I would view it, it's still an increase, and it's a percentage off of the actual amount. But the difference is if you were to use a credit card for the same transaction and you had an APR, obviously if you don't pay the full amount, then it's going to grow. Whereas in this case, it's a fixed total amount, right? But still, the way I would view that still as an interest, but maybe the scholars would disagree. But yeah.
Very bored to decide. But the question is, we keep paying them for over years, and I have a serious concern about it.
Yeah.
Now that we know, okay, a bottle of this tea is $1. I know it's 50-cent cost in wholesale. The retailer is saying $1, and we're happily buying it, knowing that $1. In Islamic purchase law, it says that if the seller declare a price and the purchaser agrees to that price, the bear is halal, right?
So
that
the
sale is halal.
Yeah.
Now that they are saying $100 item you buy, you pay $100 in 4 installment, $25, $25 upfront, $75 in 3 installment, it's all clear. Now if I choose one step further and say I pay in 6 installments, they said then you now pay 2.5% addition to the $100. So that $100 comes to 102.5, right? I know that final price. So will that be haram?
So this, I know what you're saying. This isn't a cost plus situation, because the actual what's happening behind the scenes is that the fintech provider is paying the merchant in full on spot, like right then, or however it takes for it to clear. But they get paid immediately. And then it's a loan basically between you and the lender. So it's a form of financing. It's not directly with the merchant. So they're making money off of financing, off of the loan. So and they say, these are interest-bearing ones, and then these are interest-free. So they use the word interest themselves in describing those plans.
Carefully, when you check out from Klarna, check out from Affirm, if you choose whatever they offer you free, it says interest-free installment 2, 3, 4 according to credit.
Oh, okay.
Yeah, but if you choose anything further, they don't say it's interest. Interest is something different. You go for 6-month installment payment, there will be interest like 25% addition, but they put a certain amount as addition to their profit. So like fixed price is $100, and then they say if you pay in 4 installment, you pay $100.25 each. Or if you choose 6, you pay $100 plus 2.5% addition. This addition they declare beforehand. It's not that if you don't pay, it will be increased. No, it's a fixed price. So now a scholar can vet it, whether it's an interest to pay, not to pay, it's haram, or it's not an interest, it's the declared amount. We know that this $100 item will be now 102.5.
Yeah. I was going to say I could redirect. Oh. The ones that are...
Let me explain something, if you don't mind. Offering 2 different prices for the same commodity based on the payment plan is permissible. if I'm to tell Afnan, for example, this phone is for $500 cash or $600 credit sale within 1 year. Once we both agree on $600 installment sale for 1 year, then it is halal. Even if I insist in calling the $100 extra as an interest, actually it is not. Because of more than one reason. Number one, this is not a loan. This is a sale agreement and not a loan agreement. Right? This is number one. And number two, this is one of the very few cases where the Islamic economics and finance system actually does consider and appreciate the time value. Sometimes we call it the opportunity cost in economics, which means that if I have decided to sell this phone to Dr. Wilson, $500 cash, I would have been able to make $100 profit within 1 year from that $500. Since I have compromised that opportunity and decided to give the phone to Afnan, she has to appreciate that by giving me the $100 extra. To confuse you more, if Afnan decided to go to Chase or to Wells Fargo, third party, and to borrow $500 and to pay me cash $500, to go back to Chase or Bank of America, paying them $600 within 1 year, that will become an interest because there is a third party who is lending Afnan some money. But when she decided to purchase that phone from me directly, it is an owner finance or in-house finance, and that extra money that's introduced as an interest, it is not. This actually brings to our attention very, very important fiqh maxim in the Islamic finance system. العبرة في العقود للمقاصد والمعاني لا للألفاظ والمباني. What matters in transactions is the essence and reality, not the wording or the formality. So even if I insist in calling that extra $100 as an interest, actually it is not, unless she goes to a third party and borrow $500, pays it back $600. Oh, that's clear interest. But between me and Afnan, in-house finance, owner finance, any extra, as long as it is agreed upon, and we close in one option, by the way. She cannot just take the phone away and like go away without finalizing a deal. It's either or. You either $500 cash, you pay me on the spot and I take your phone, or otherwise it's $600 for 1 year installment. Once we close, the price actually is locked. It cannot be increased, it cannot be decreased. Good to go? Yes. Can I go to? Can I go to back to sleep now? Yes, sir. Do we have time? I'm sorry.
This is serious matter, that's why please allow us. Can we have a fatwa or a certificate or a written verbalizing thing that we just say? Because that bothers me, bothers hundreds that I know of in Greater Eastern already.
I do this presentation like all over the country. You just talk to me after we finish. Inshallah, we can arrange for something in your local masjid. I do a presentation called Islamic Finance 101, and I explain like all these basic details. So if you are interested through Guidance College, we can arrange inshallah for like your good self and or anybody else here. Thank you.